Good morning, ladies and gentlemen, and how are you doing today? I welcome you to another morning session as we take a quick look at the financial markets using technical parameters to review the current market structure, manage our existing trade, and at the same time share new ideas against the UK and the New York session today. Well, we do have a couple of pairs that we have been monitoring, and that is we have the US oil, we have the US oil, we also have the GBPUSD, the USDJPY, and the which other one is that again? I think we have like four or five that we are monitoring for. Okay, so we have the XAUUSD as well. So we shall be looking at this. And one major thing that we'll also want to be taken into consideration is the FOMC that came in yesterday. And from the look of things here, so what I normally do here to monitor search is to see what FX Street is bringing up. And from what we have here, we can see that the document showed that a few participants favored a 50 basis point rate hike, while some believed there was an elevated risk of recession in 2023. And more relevant, all participants agreed more rate hikes are needed to achieve the inflation target, while also favor for the Fed balance sheet reductions. So finally, participants stated that the continued tight job market will continue to put upward pressure on inflation. And what we have seen in the last 24 hours following the FOMC was a huge traction in favor of the dollar. So we are going to be looking at that and how we want to be anticipating trading session today. And also remember, we also have a major macroeconomic event coming up today, and that is the gross domestic product annualized for quarter four. And this is coming up in, I think, 4 hours from now. So we shall also be anticipating that, looking into the current market structure to identify and see how participants in this market are actually looking forward to that event. And obviously, we shall be seeing the reflection of the anticipation on the chart as price action. So, with that being said, here, what we are going to be doing now is to dive into the chart. And welcome once again if you are joining me for the first time. So, I just started this with the hopes that I will be able to follow up on the pairs I normally publish during the course of the weekend. So I'll continue to do this, and if there is a necessity, I might add the New York session to this one so that I'll be having two live sessions in a day. So with that being said here, let's dive into the chart, and the first one we are going to be looking at is the US oil. And in fact, in the last 24 hours now, we have been profitable on this pair. And let me quickly run through what our expectation was during the live session yesterday. So during the live session yesterday, we were around, hold on a second, let's see. Okay, we were around here during the live session yesterday. That was around the $75.90 level. So this is where we were during the live session yesterday. And I told you that we are going to be anticipating a sell position here. And why have we decided to be selling the US oil yesterday? Well, this is what we saw during the live session, and even at the beginning of the week, we saw the situation where price action had been caught within a channel. And this was the channel initially at the beginning of the week, where the $77.90 area was serving as the resistance point initially at the beginning of the week. That is what we saw. Then we saw the support level sitting at around the $76.35. And the simple structure here is the basis for the trading idea that we identified for the week, where we said if price action breaks above that resistance point, that is the $77.90 area, we shall be anticipating buying opportunity. And if it so happens that price action breaks down the support level of that channel, we will be looking out for selling opportunity. Though we had some moment where we had buy position when price action broke out of the $77.90. But one thing we observed here is that despite the breakout of the $77.90 area, we saw how sellers negated all attempts by the buyers around the $77.40. And as you can see here, this has been consistent for about 48 hours before we finally saw the breakdown of that bullish trend line here to signal a bearish momentum, a potential bearish momentum at this point. And to further emphasize and confirm that we should be selling, we saw the breakdown retest of that $76 level, 35-cent area, which I said is the support level for this week. And look at what has been happening since the beginning of the week. It has been a strong buying zone for participants in this market. And immediately we saw the breakdown of that structure. It was a beautiful signal that the buyers no longer have the capacity to continue to hold that bullish momentum anymore. And with the retest of the $76.35 level, we had our position triggered. And I told you here yesterday that we are going to be, the current structure has the potential of giving us multiple entries on this one. And we had structures like hold on a second, let me zoom this out a little bit so that we can see things more clearly here. So we said we had the $76 level. If price action breaks down, retest that structure, we are going to be adding more position to our existing trade. And at the same time also, we also have a structure at the $75.50 level. We also added another position there. And during the later part of the New York session yesterday, I added another structure around the $75 area. And I published this on my TradingView platform. Where I told us to be selling as soon as price breaks down the $75.50 level. So these are my daily commentaries on the trading platform, on the TradingView platform, where I dish out what my expectations are. So as you can see here, the $75.50 level was triggered. At this point, I updated that we shall be selling below that structure. And later on, I also shared something on the 15 minutes time frame that supports a selling opportunity if price action does break down the $75.70 level. And this is what we saw here. Price action dropped to the downside in our favor. And if you have been part of this trade since yesterday, if you had only taken one position, you will definitely be running with over 200 pips in profit at this point. So congratulations to those who have been on standby to catch this move. Now, with the current structure we have here, being in profit already on this one, the next thing we want to be doing here is to secure this current position, as we don't want to give back whatever we have made. And if you look at the current structure here, let me zoom out a little further so that we can see things more clearly. We can see that since the beginning of this week, price action has been bearish. And to further emphasize the bearish momentum on this chart, we connected the series of lower highs here, which has given us this resultant bearish trend line that you can see on your screen right now. And price action has actually been respecting that trend line. And one thing I want us to look at here is that since price action broke down the $74.30 level, we have seen a situation where price has come back into the structure. And what makes the structure a key moment here is the fact that it shares a confluence with that bearish trend line at this point. So we are at a critical point in the market right now where anything could actually happen. We could have a situation where price action respects that bearish trend line one more time to incite another wave of bearish momentum to the downside. So this is one possibility we are going to be analyzing for today. And another thing that could happen from this current structure is we could have a breakout of that trend line to signal that the trend line no longer have the capacity to continue to hold bearish momentum. And if this happens, by pressure above the structure will definitely be confirming that we should be anticipating a bullish momentum from this current structure. So what I'll be doing right now is to extend this trend line a little further, as this is going to be the yardstick in which we are going to be using to guide trading activity for today. So what I'm going to be doing now is this. Since we already have a structure here, and then look at what has happened as soon as price tested the $73.83 level, we saw some buy pressure around this area. So we want to be identifying that structure as well. So it's more or less a support level based on this current structure. So I will identify that level, then label it for the sake of clarity. So we shall be having it at $73.85. Let me just place it as that. I'm trying to $73.85. So let me put it at $73.85. So we have a support level sitting at the $73.85 level at this point. So going for selling opportunities on this one right now, we'll definitely want to see price action break down that support level. Remember, as you can see here, as soon as price tested the $73.85 level, we saw some buy pressure around this area, bringing price back into that structure that shares a confluence with that bearish trend line. So if this breakdown of the $73.85 level happens, hereby price action respecting this bearish trend line one more time, then it will be a beautiful opportunity for us to join that decline to the downside. And if a further breakdown of the $73 level happens, then definitely we want to be adding more position to our existing trade around this area. So that is what we shall be looking out for selling opportunities here. And for those who are already in this trade, I will be advising you to move your stop loss to somewhere right above the $74.50 level. Let's give some room for price action to breathe here. And if we get taken out, then we know that we are getting ready for a bullish momentum. So that is the first scenario we are looking out for here to sell. So we are looking forward to price breaking down the $73.85 level to trigger our sell position at this point. So to make things easy, you can place your sell stop order right below that structure to get things going in that regard. Now, in as much as we continue to look out for selling opportunities here on the US oil, we should not ignore the possibilities that buyers could actually come in from this area. And that is why I have said that we are going to be using this bearish trend line to guide trading activity for today. So what this simply means is that if we do have a breakout of that bearish trend line here this morning, then that will be a sign that the trend line no longer have the capacity to hold that bearish momentum anymore. So if a breakout happens, then we should have our position triggered right above the $74.30 level and look out for buying pressure around this area to further confirm that this bullish momentum is going to be valid. And one thing that will happen here is that if price action does break out of the $74.30 level, then we are going to be having a beautiful reversal pattern in the form of a double bottom structure. As you can see here, price was unable to break the previous low and then giving us a beautiful structure like this, with the neckline of the reversal pattern sitting at around the $74.30 level. So a breakout of that $74.30 level will confirm to us that buyers have come to stay in this market, and at the same time that the trend line no longer have the capacity to continue to hold that bearish momentum anymore. So we are at a critical juncture in this market. So we have identified a simple setup around here, which we shall be using to guide trading activity for today. And if there is any change in this current structure, I will be dropping an update on my TradingView platform right in the comment section of the US oil publication. So that is that on the US oil. If you do have any questions, feel free to drop your inquiries in the comment section while I move on to the next next pair. So the next thing I'll be doing now is to move on to the next pair. So the next pair we are going to be looking at this morning is the USDJPY. Now on the USDJPY, it has been a choppy situation here in the last 48 hours as price action had continued. Let me zoom this out a little bit so that we can see things clearly here. So price action has been a little bit choppy since Tuesday, and we have had a situation where price has been ranging between the 135.00 level and the 134.500 area to emphasize the indecision in this market. Though prior to the I think after the FOMC yesterday, we saw the breakout of this trend line. Remember, we identified this trend line here where we said if price action does break out that trend line, we shall be looking out for opportunities to buy. And we saw the breakout of the 134.700 level, which also shares a confluence with that bearish trend line. We saw price action come back to do a retest of structure, and if you are taking advantage or added another position to your existing trade, you would currently be running with a small profit of about 15 pips in profit. And remember that we have been buying the USDJPY since the beginning of the week, as we took advantage of the buy opportunity right above the 134.150 level and since then we have been adding more position around this area. And I told you yesterday that we want to be moving our stop loss accordingly to somewhere right around the 134.500 level, which appeared to take us out of that buy position that we have been in since Monday on this one, and we anticipated another buy opportunity above this area. So right now we are within a channel between the 135.00 level and the 134.500 area. So now if you had bought the USDJPY above the 134.700 in the last 24 hours, I will be advising you right now to move your stop loss to the entry point here to secure this current position, as we don't want to any price action move to negate the profitable situation we have on the USDJPY. And remember that for buying opportunity, we are still anticipating that price action will break out of the 135.00 level. So that is what we are still looking forward to. So ensure that you have moved your stop loss accordingly to secure this current position. Now there is one thing I would like to show you on my 4 hours time frame here, and this is what we have here. Since the beginning of this month, price action has been bullish, and as a result of this, we have this beautiful ascending channel that you can see on your screen right now. And it appears that things are looking a little bit choppy around the 135 area, where it's likely that price action might be anticipating a retracement of this impulsive move that we had here. So we can see what happened here. We saw the impulse leg, and since price got into the 135.00 level, we have been witnessing selling pressure around that area, negating all attempt by the buyers to break out of that structure. And as a result of this, we have something that looks like a flag pattern, or you could call it a rising wedge at this point. And there is a likelihood that price action may break down the structure at the 134.500 level to incite a counter trend opportunity, probably in anticipation of retesting the support level of this ascending channel to incite another wave of bullish momentum at this point. So we need to be very, very careful here and try as much to understand how participants in this market will be reacting to the structure in anticipation of the GDP coming up later today. So in that regard, I will be scaling back down into the 1 hour time frame, as it appears that we are going to be having the same idea we had during the live session yesterday. And in order to guide our trading activity for today, I will be identifying a simple setup here that we want to be using to guide trading activity. So we have the 134.500 level, which has been a support level in the last 48 hours here. So we saw since the break above of this level, that was on Tuesday, we have seen how that level had remained a strong buying niche for participants in this market. But with the continuous selling pressure around the 135.00 level since the beginning of the week, giving us the fact that buyers are really finding it difficult to break out of that structure, I'm of the opinion that the selling pressure here could lead into a situation where a breakdown of the structure will happen, retest to incite another wave of bearish momentum to the downside. So if that is going to be the case, how do we intend to take advantage of this move? Well, looking at the trend line that we have here since Wednesday of last week, that's been holding bullish momentum, as you can see. So what I'll be doing here is to see price action break down that trend line. And in fact, the trend line also shares a confluence with the 134.700 level here. Beautiful confluence there. But if the breakdown happens, we need further confirmation to join that decline. So we want to see something like a breakdown of the 134.700. Remember, we are not getting too excited at this point, as we need further confirmation to give us that trading opportunity. So if price action comes back, does a retest of the 134.700 level with selling pressure below the structure on our lower time frame, then at this point it will be a very good opportunity for us to sell the USDJPY. And if a further breakdown of the 134.500 level happens, possibly a retest of structure, we'll definitely be adding more position to our existing trade. And as at this point, we should be having our TP target somewhere right around the 133.500 level, a level which shares a confluence with that support level of that ascending channel that we identified on the daily time frame. So that is what we shall be looking forward to here on the USDJPY, that is to sell the USDJPY. However, if price action does break out of the 135.00 level here, then as at this point, it will be a good opportunity to buy, as price action would have taken out all the sell position within the zone here, give us some liquidity, which will be reflected on the chart as buy pressure above the 135.00 level. Then we could be anticipating another wave of bullish momentum at this point. So it's quite a simple setup we have here on the USDJPY. So we have three structures we shall be using to guide trading activity for today. We have the bullish trend line and the 134.700 level, which if a breakdown of this level happens, we shall be anticipating a selling opportunity. However, if price action breaks out of the 135.00 area, we shall definitely be looking out for buying opportunity on the USDJPY. Oh, sorry about that, Mana. Thank you very much. Okay, I hope it's better now. So we are going to be looking out for, I hope it's better now, Mahan. I'm glad to have you around. I never knew you online. Okay, so that is what we are going to be looking forward to on the USDJPY. And if there are any surprises here, that is during the UK or the New York session, I will definitely be sharing an update on my TradingView platform. So that is that on the USDJPY. If you do have any questions, feel free to drop your enquiries in the comment section. Now, moving on to the next pair. The next pair we are looking at this morning is the XAUUSD. And what have we been seeing here on this chart? Okay, hold on a second. I think I'm having a little network each here. I hope you are not affected by this. Please let me know in the comment section if things are not working too well so that I can change my router. All right, so now we are on the XAUUSD, and in fact at the beginning of the week we identified a simple channel here which is between the 1845 level here and that was serving as a resistance point for this week, as we saw that every attempt by the buyers to break out of this level has been met with strong resistance from the buyers. Then also we had the support level of the channel sitting at around the 1838. Now, one thing we normally look out for whenever we identify a simple flat channel like this is to look out for either a breakout or breakdown of that channel for trading opportunity. And if we look at what has been happening here since the beginning of the week, we would notice that price action has been breaking down the 1838 level, which happens to be the support level of that channel. As you can see, at every point in time we have been witnessing price action breaking down that level to emphasize the strength of the sellers at this particular point in time. And with the situation we have here, that is price action breaking down the 1838 level, we do have no choice than to continue to think of selling opportunity around this area. Though we had some bullish attempts here during the I think on Tuesday stroke Wednesday, we had some bullish attempt, but we were taken out of our position as price action went against us at that point. And during the New York session yesterday, I shared this on my public platform where we said if price action does break down the 1838 level, 833 level, remember this level has been a strong buy niche since the beginning of the week. If we do have a breakdown retest of that level, then definitely we shall be thinking of selling the XAUUSD. I think I shared this during the New York sessions yesterday, and that was prior to the FOMC minutes. And let me show you how that went by.
Hello everyone.
So
Good
we
evening
have
to
this
you.
on my TradingView platform here, where I shared that the breakdown of the 1833 level will be okay. This is it here where I shared, and this was prior to the FOMC minute. I guess, hold on a second, I'm trying to, okay, yes, here it is. So it was prior to the FOMC. So we said if price action breaks down that structure, we shall be selling, and we saw the breakdown of that level, and price action moved. I think how many pips was that? It moved about 1,000 pips thereabouts before we saw this bullish momentum. And you might have taken your profit or probably moved your stop loss accordingly to secure your position. And at this point, you might have been taken out of this trade. And if you are still in this trade, that is, if you did not move your stop loss at all to secure your current position, then definitely you will be in profit of about 500 pips right now. So what I'll be advising you to do right now, if you are still in this trade, is to move your stop loss up to your entry point to secure this current position, and at the same time give room for price action to breed around this area. So going into the New York session today, we have a critical structure here at the 1833 level and the 1825 area to guide trading activity for today. Now, how do we make use of this current structure to identify trading opportunity? Well, we can see what happened here yesterday. We saw the breakdown of the 1833 level, and from a technical standpoint, whenever we witness a breakdown of a structure like this, we want to be seeing price action do a retest of structure to give us a signal that price action is actually going in the direction of the prior leading price action. Now it appears things are actually evolving in that direction, as we have a couple of retests of the 1833 level, and price action is approaching that support level that was identified at the 1825. So what we are going to be doing now to join another wave of selling momentum is to wait out for a breakdown of the 1825 level, where we shall be looking out for selling opportunities below the structure on our lower time frame to join that decline to the downside. So if you are not yet in this trade, well, we have another opportunity to join if price action does break down the 1825 level to the downside. Now, if the contrary happens here, so instead of price dropping to the downside, and we do have a situation where price continue to climb to the upside here, unable to break down the previous low here, and price action leads into a situation where it takes us out of the current sell position, resumes above the structure with buy pressure, well, this might likely be a bullish momentum, but I wouldn't be advising us to take advantage of a bullish momentum above this level. And the reason why that is simply because of the nature of price action since the beginning of this week. As you can see here, price action has been bearish since the beginning of this week, and it's unreasonable to be thinking of buying at this point, as we still need further confirmation to ensure that a buying opportunity is valid here. And in that regard, I want to identify a trend line here, which we can actually use to guide trading activity in this regard. So we have something like this. If we connect the majority of the lower highs here, we should be having something like this. And if we bring out our line back, our candle chart, if we do some readjustment, then we could actually have price this trend line go something like this. So what this simply means is that if we do have a situation where price takes us out of the current sell position, break out of the 1833 level, a level which also shares a confluence with that bearish trend line, taking us out of that trend line, then we might be seeing that as a signal that the trend line may no longer have the capacity to continue to hold that bearish momentum. So what we are going to be looking forward to is to see price action drop back into the structure. Look out for buy pressure around this area on our lower time frame, which will definitely be giving us a confirmation of a trend continuation to the upside. So that is what we are going to be looking out for if we are going to be buying the XAUUSD. But if price action continue to remain below the 1833 level, we shall feel comfortable in the current sell position that we are in right now. So that is that on the XAUUSD. If you do have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to I think this is going to be the last pair for today, and that is the GBPUSD. All right. So I'm trying to load up my chart now. I think the network is quite terrible this morning. Okay, so the GBPUSD chart is about to load in a moment. Please hold on a second. All right, so here we are. It has gone back to the XAUUSD again, so we shall do so going back to the GBPUSD. All right, so here we are on the GBPUSD. And during the live session yesterday, we were around, where were we? Okay, so we were around here yesterday where we saw around the 1.2100 level. And one thing I made mention here yesterday is that price action has been bearish since the beginning of the week, and as soon as price tested the 1.21500 level, we have been seeing selling pressure, price action finding lower highs. And as a result of these lower highs, we connected these levels together and we had this bearish trend line figured out here. And since price action has been on respecting this bearish trend line, yesterday I told you that we want to be having a sell position right under the 1.2100 level to take advantage of that bearish momentum with a stop loss somewhere right around the 1.21500 level. And this was exactly what happened during the UK session yesterday. We saw the breakdown of the 1.2100 level, and in fact, if you had missed out on that opportunity, the market gave us another chance to join that decline to the downside by doing a retest of that structure. And in fact, the retest lasted about 4 to 5 hours before we saw this bearish engulfing candle break down the structure. And I also made mention of the fact that this current market structure has a tendency of giving us multiple entries, as we also had another position right below the 1.20750 area to join that decline to the downside. And if you had been part of this trade, you would currently be running, if you are taking the first position, you will currently be running with about 57 pips in profit. And if you are taking the second position here, you would currently be running with about 25 pips in profit. So we have a total of over 70 pips right now. And the next thing we want to be doing, first of all, is to secure this current position by moving our stop loss accordingly. And I think the most appropriate place to move our stop loss at this point is around the 1.20750 level. Let's secure the position here. As you can see, that level has been a major determinant of price action since the beginning of the week. Look at what happened here. It was initially a buying zone. We had it as a buy zone here yesterday as well, before the breakdown retest of that structure happened. And we saw that as soon as price came back into the structure, we have been witnessing another wave of selling pressure around that area. So because of this, now we want to be moving our stop loss somewhere right above that structure, secure this current position there, and then let's anticipate another entry at the breakdown of the 1.20500 level here. So I have a signal here already waiting for a trigger to happen, and hope that price action will continue to ride all the way to the downside. And if a further breakdown of the 1.200 level happens, we want to be adding more position to our existing trade. So for today, we have this bearish trend line guiding our trading opportunity here. So as long as price action remains below this bearish trend line, are we going to be comfortable in the current sell position we are in? So now that we have the sell position triggered and running, and we have moved our stop loss accordingly, and we are also anticipating another breakdown of the 1.20500 level to add another position to our existing trade, there is one thing I would like to state here, since I'm not going to be with you when during the New York session or probably during the UK session when things move beyond what we are analyzing here. So one thing I would like to state here is this. There is a likelihood that bullish momentum could also come in. So we want to have an open mind so that we can catch those moves when they finally happen. We will not be caught in a dilemma. So if we do have a situation where price action takes us out of this current sell position we are in right now, breaking out of the 1.20750, that level which shares a confluence with that bearish trend line that has been guiding bearish momentum since the beginning of the year, then this would be a good sign that the trend line may no longer have the capacity to continue to hold that bearish momentum. And if that is going to be the case here, then we might likely be looking out for buying opportunity at the appearance of buy pressure above the structure on our lower time frame to join another wave of bullish momentum. And remember that we had this bullish leg happen here on Tuesday, which might likely be the second phase of that bullish momentum if price action breaks out of that trend line. So let's keep this option 2 in mind while we secure this current sell position that we are in right now. So on this note, I want to wish you best of luck today. It has been a wonderful moment with you guys, and I hope that you'll be on standby to catch this whatever opportunity that comes in during the New York session and the UK session. And one thing I would like to tell you here is that if it so happens that something different happens from what we discussed here, I promise you that I will be dropping an update on my TradingView platform. So if you are not on my TradingView platform, you might want to join me on my TradingView platform so that you don't miss out on the regular updates I normally share in the comment section of all of my videos. My TradingView user ID is DARCSHERRY, called Dark Sherry, so that you can be part of my daily commentaries. So thank you for being around again. I wish you best of luck during the New York session and the UK session today, and hoping to see you same time tomorrow, 8 a.m. UTC, as we come here again to review the financial market and get prepared for the last trading day of the week. Please remember that we have a GDP event coming up, so ensure that all positions that you have open must be secured to mitigate against any risk of sudden pullback that might take you out of your current position. So on that note, I wish you best of luck and do have a wonderful day. Bye-bye.